very good afternoon to you, our cherished listeners and viewers also. It's always super exciting to come your way every Wednesday with your favorite business development program on Radio Masterclass. Masterclass is powered by Joy Business and brought to us by Goyle. Goyle, they say good energy. Goyle, Yenara, Yedia. Masterclass is also brought to us by Firstcode Management Services. They say industry, get it right. Masterclass comes your way every Wednesday at 1:30 p.m. at 1:15 p.m. and runs all the way to 2:30 p.m. here on the Superstation Joy 99.7. My name, as always, is Yaw Barnafo, and I will be your host for the show today. And so in the last couple of weeks, the conversation here has focused on corporate governance and business compliance. Here in that conversation, we were privileged to spend time here in the studio with Richard Edudako, who is the head of legal at Firstcode Management Services. They came here on the show. Just remind us also that Firstcode Management Services make it possible for us to bring you Masterclass every Wednesday. And so it was a privilege to have them here with us in the studio and also have them here again with us today, as I'll be introducing the resource person for today shortly. In that conversation, he emphasized some of the very critical things that we need to know as business owners. You know, sometimes we set up our businesses as sole proprietorships, as companies limited by shares or limited by guarantee, but we do things in a way that necessarily does not conform with the position of the law and of authority. And yesterday I was listening to a conversation that said that, sometime when a business conversation was taking place, it was said that there's no law that is asleep on our books. There's no law that is asleep on our books. It's only when you fall foul of that law and it's activated, that's when you realize that there are laws. And so if you're a company limited by shares or by guarantee, the way you do your business clearly must differ and conform to the laws of the country. And he went on to talk about having a company secretary, having a board in place, having a management, and you being the owner of the business, not necessarily having to be on the board. In fact, one of the things he said that stuck with me was the fact that members of boards today not only have responsibility, for the company alone, but they have vicarious liability also, which meant that their very persons were also at risk if they made decisions that brought the company into disrepute. Today we continue in that line of conversation, but we want to focus a bit more on the money aspect of the conversation. Obviously, people go into business for different reasons. People go into the business to solve problems, to satisfy a certain need, to follow a family tradition, but primarily, about 70% of people go into business to make a profit, to make some money. And so we're going to be looking at making money. In the last 2 days, there has been a conference in the city of Accra, which is the Ghana CEO Summit, and many conversations have been held about how to better our economy as Africa, as Ghana, as a people. The Africa Free Trade Continental Area conversation has also started in this respect. And all of these conversations is to help our businesses become better. How can you do better than you are doing now? Now that the borders are open, you're going to be sitting here and competing with companies in Mali. If you were doing coconut water, you think that you're the only one who's doing it now. There's going to be various strengths that come to bear from the various sub-regions. And clearly you have to be in a position to make yourself export ready, like Richmond said to us, and make yourself prepared to compete in that market. A significant thing that has come up in this conversation in the Ghana CEO Summit is that for companies which seek to invest in SMEs and companies that are startups, one of the critical things they look at is not what you say you are going to do. It's not what your business plan says, but it's what your books say. What do your books say? What do your numbers say? Just before we came on the show, I was having a conversation with my resource person, whom I'm introducing very shortly. He is a senior finance consultant also at Firstcode Management Services, and he's been in the space for over 30 years with a great wealth of experience. And today he's taking the time out to join us and share some basic experience with us on the subject of our bookkeeping and accounting for small businesses. Bookkeeping and accounting for small businesses. I was saying earlier that it's not what you say you can do, but it's the story that the numbers tell. Have you ever thought about getting a sort of software or a certain simple spreadsheet, even for yourself as an individual, to monitor your inflows and your outflows? When I say inflows and outflows, how much money comes into your pocket by way of revenue or income, and how much goes out of your pocket by way of commitments, taxes, or spend. And you'll be surprised to find out that most people are living beyond their means. And by that I mean that they're spending slightly more than they're earning. That cannot be a correct form of math. If you're spending more than you're earning, then you're going to be borrowing. You're going to be in deficit. You can't do certain things. It is even more so critical when you do this as a business owner and you dip your hand in the coffers and you don't structure your payment systems and you don't keep your books. Oftentimes, when we go for facilities, we fix the numbers, we cook them nicely, and we get people who help us to do this thing, fix our mind, fix our attitude. Let's do the right thing in our businesses. But the thing about fixing numbers is that once you fix the numbers, they must tell a certain story, and there's a trajectory to that story. If you say you are in position C, you must have gone through A and B. Now, when a finance person like Mr. Johnson, who has joined us this afternoon, takes a look at those numbers, he can tell that either you are doing some voodoo mathematics or there's something that doesn't add up. So he's going to be sharing those thoughts with us. Mr. Kwaw De Graft-Johnson, Senior Finance Consultant, Firstcode Management Services. Mr. Johnson, you're welcome to this conversation this afternoon.
Thank you for having me on your program.
I'm super excited to have you because it's always important to go back to the basics. We're working to make money. I heard someone say to me once that, for example, some of our very strong business people in the Makola market, Okaishi and other places, are running losses, but they think they're making profit. And the reason is that, for example, let's say that they have an equity of about $300,000. Some of these women go to Dubai, they go to Turkey to shop and all of that. They go with dollars, thousands of dollars, and they load containers and they come back. The value of that $300,000 they're holding could give them a return of about 1.5. Okay, dollars, $1 million.
Yeah.
But at the end of a trading period, they make $1 million and they say, I've made profit. Yeah. But the strength of your equity could have given you more. So you're actually running at a loss and not at a profit. Let's have a big conversation. Take us back to school, if you like, on some of the basic things that a company should look at in terms of its bookkeeping, in terms of its accounting, in terms of its financial management and financial prudence, if you like. And then at some point, we'll get interactive and get our listeners to be a part of the conversation. Talk to us.
Yes. As you're saying, if 70% of the people setting up businesses are looking to see profits, sustainable profits, that means over a longer period of time, you find it strange that they are not interested in knowing whether they are actually making profit or not. Because the only way to know whether your performance is positive or not is having financial statements properly done. Now, when you ask people who have been in the field 5, 6, 7 years of business, why aren't you having somebody prepare proper books of accounts for you to get credible financial statements? You'll be surprised at some of the answers. Oh, I don't want people to know my financial position. Oh, I'm dodging the taxman. I don't want the taxman to know. Some will even tell you that they are the ones running the business. and they are doing well. They know they are doing well, and so forth. Now, the whole point is that what they may think, as you're just saying, what they may think is profit or whatever is not the way the accountant looks at it. There's a standard way of determining how you compute these figures. So if you don't compute them according to those, you'll be misleading yourself. See, another point that comes up is that what you just said during this conference, that there's so much money available now for startups, people in that space, for expansion and so forth. Even this COVID time, our government wanted to release money. Why did a lot of people struggle? Simple question. Can you bring your financial statements for us to look at and expand pandemonium? See. So what we want to let people understand, perhaps, is to disabuse their mind of what bookkeeping and accounting is. We usually tell people, you, the owner, you have the skills to be a bookkeeper. When it comes to what we call accounting, then you need the accountant, somebody who has gone to school to follow the international rules of how this should be presented. So what are we talking about when we say bookkeeping? Bookkeeping is simply in 3 words. Recording all the events and transactions of the business in monetary terms, because the unit for which we are measuring is money. Then we add that, can you also add what we call source documents? Anytime you're interacting, you get receipts, payment vouchers, invoices, way bills, petrol station, you buy petrol, they give you all those things. They just confirm the records that you are giving. So all you have to do is take a diary or a notebook. Any money you receive, write it down. Any money that goes out, write it down. That is essentially the elements of bookkeeping. And any business owner, you can do that. Just as long as you can read and write, you can do that. When you've done that, then you bring in the person you are calling accountant. So that bookkeeping is more like data, raw data, you understand. One has gone into some process to make it meaningful. We call it information, then you get what we call account results, which is financial results for which you can make decisions. So what does the accountant do? He comes in recording. So that's what the bookkeeper basically is, a recording, right? Then he's taking what you've given him, he's analyzing it, classifying into various categories, whether something is an asset or an expense or a sale or rent or whatever. Classifies them, then he summarizes them. So by the time he's finished, you'll be able to know that, your whole sales figure from January to December is X amount. This is the amount of money you spent on salaries and so on. So it's put in a format recognized internationally, because that's why we have financial statements done in such a way that it's comparable with different, Then you come and invite maybe an auditor to come in to make sure that it conforms with all the other things you see. So if you get that summary, which we call your financial statements, most of us will know it as profit and loss statement. That will tell you whether you're making profit or not. Your balance sheet, that tells you the economic value assets you've got. That means you bought a car, you have computers, whether you owe people money, how much capital you put in. Those are put together and called balance sheet. The movements of cash that occurred, which we call the cash flow. Then if you took it further, we want to know the movements on the shareholder funds. Did the shareholder's value increase? Did he make profit or what? Did it go up or he added more capital? That also. And then if it's an audited statement, you have what we call notes of accounts. This will provide details of some of the figures which have been summarized in the main body, right? So the added value is that you are able to interpret your performance and know if for 2-3 years you'll be able to know whether you are making profit or you're not making profit. Because as you said, there are many people who are mistaking profit and cash flow. You can have numbers that show you are making profit, but you can easily tell you are not making profit because so many other things are not put in. But let me quickly say this. The bookkeeper, the business owner, he's likely to be able to capture information on every transaction that involved cash. But there are other things that come into accounting. They are non-cash. For example, you bought a vehicle, you've used it over 2 years. The accountant will come and tell you that the value, because of wear and tear, has reduced somewhat. So we'll use something we call depreciation to bring the value down. Those you may not know, because then he will use journals. He'll show you and then sign something to indicate for which you will approve about that. You might decide that you paid rent 2 years and think that all that is an expense. No. He will put it down and say, this is an asset. Every month you use, I'll bring some from that asset and then put it in your, There are so many things like that that come into play. Then one other thing I need to chip in very quickly here, since I'm sure people will wonder is that a foreign investor comes into this country, a business that has been around for years, 7 to 10 years. You're doing well, seemingly. I say, give me your financials so that we can see whether we can go into partnership or invest. And the first question is, why aren't you declaring dividend? If you set up this business to make profit, and I see you've never declared dividend, then what is really happening? Then they begin to think, maybe this man has found a clever way of siphoning money from the company, and we don't know because, well, he's got figures. You look at retained profit, it's a very huge figure there. But is it genuine? You see, so they sometimes start to discount. And then if you give it to a financial analyst, and it was the accounts, well, if you created your figures are not correct, there are so many indicators that one can use to determine that you can't depend on this. The auditors will tell you true and fair, meaning that you can't actually say it's 100% accurate. But within reason, it's fair. It's not going to be 2% out here there in terms of variance, but that is, And then also, because it will be used by different parties, the accountancy bodies want you to make disclosures. So they are prepared in such a way that if you took somebody's financial statements, because it's the financial statements that are selling that person. Everything you want to know about that person is supposed to be in those financial statements. So that is what the person is going to use to assess everything that you've done. So it's very important for people to realize that it's your selling point. It's like if your CV or application to for a job interview is not acceptable at that level, you are just thrown off. It has to meet a certain criteria, and those are some of the things that people are overlooking, and
it's costing them.
Yes, seriously, and I'll talk about that later.
Right.
What's
I mean,
them.
while we're having this conversation, something comes to mind very strongly that, people set up their businesses limited by shares, limited by guarantees, or apprenticeship. They set it up with good intention to try and do so. They say the things I want to do, I'm not able to do. The things I'm not supposed to do, those are the things I find myself doing. So there's a bit of a deficit there. But I think that some of this is also informed by a lack of education.
Yeah.
So someone is listening to us, they're running a business, and they're saying, listen, like shipping, like a few other things in this country. And good afternoon, my shipping colleagues. I used to be in shipping once, so this is nothing against the shipping industry. But the areas here in our country, in industry, where people feel like, I'm afraid of this area, it's for those who know about it. So finance is one of those areas. There are people who, when they start to talk about numbers, they freak out. They don't understand it. They don't understand the terms. A business owner listening to us this afternoon thinks, once I get my money and I pay my workers, that's the end of it. What's all this conversation about? It's for those who want to sit on TV and radio and talk. But if you're a business owner, we're saying you must understand the basic things. Share with us a few basic principles. Revenue and income. What's the difference? Assets, liability. Why is it relevant to Kofi Mensah in Mataiko this afternoon, who sells car tires and imports them? That's a significant business. You're importing. You're exchanging local currency for foreign currency to import. These principles apply to you. What are your assets? What are your liabilities? What is your revenue? What is your income? What is your profit? Take us through some of those principles. You can talk about assets, liabilities, revenue, income, liquidity, cash flow, profits, depreciation. Take them one by one. Let's break them down.
Let's look at somebody who actually, let's for the sake of it, say he has 100,000 cash, and he says, I'm starting a business. We'll call that your capital. That's your initial investment.
I think that one everybody understands.
Yes.
Capital.
Now, that money is going to go into expenditure of some sort. You chose to buy a car, that's an asset. Why am I calling it an asset? That vehicle is going to go over 12 months, going to be used over many years to help generate some money for you. Your computer or the plant or machinery that you bought, whatever you bought in, right? Those are the things we call assets. Tangible things that are economic value, which you're going to use over a period of time to generate some returns for you.
So if my product is fruit juice, or car tires, or spare parts, when those spare parts arrive in my warehouse, they are assets to me.
Yes, we will call that inventory or stocks.
Stock,
right? Because they have a value there. Please understand, that stock when sold is convertible to cash. It has a value. All right? So the moment that it's sold, it's come out and you make profits. You make sales. Now, the difference between all the expenses you incurred, bringing the ties in, including a bit of a labor and whatever that direct to it, if you take it out of the sales, that is when you are getting what we call profit. But mind you, maybe you brought 100 ties and you sold 50. We are only going to account for sales for 50 of the ties because 50 will remain as an asset until it's cleared, right? So it becomes an asset at some point and it will move. So with things you buy and sell, the asset is transitory. It is there one day, it's not there the other time, right? So it's more liquid in a sense.
Well, you talk about liquid. I was going to go to liquidity. And perhaps I'll just give this analogy as well. So I had a conversation again here at Masterclass, I think a couple of years ago. And the resource person said, it's possible for a company at the end of a month, a given month, to have money locked up in credits and therefore not have liquidity. So they are not bankrupt, but they don't have liquidity. Explain the concept of liquidity to a business owner. I'm asking this question so that people understand that, say, oh, me was cow and Nema warehouse, but the Nema warehouse, you haven't sold it. So what is available to the business owner as liquidity, as cash, as stocks, as revenue? Big difference between revenue and income. I mean, you are spending money to do the business. When you have gained the money as revenue, you must take out your overheads. At which point you now declare profit. So I just want that clarity for some of our people who are listening who need that education.
Let me use rent. You go on and pay 4 years rent. That money is locked up. You don't have access to it. All you can do is use the premises for 4 years. But it has locked up your money. Yeah. Assuming you paid only 1 year, the 3 years you could have bought in treasury bills and got some money available. Now, what we mean by this is that if you put the money in a so let's look at how cash. Cash in a bank is ready cash, right? If you buy treasury bills, for example, it's near cash because you have to discount before you get it. So it will take maybe a day or two. You get me? If you go and buy, you keep money in stocks, depending on how quickly it moves. So the point you want to do in managing money is that why should you buy 3 months supply and lock up your money for 2 months, for example, when you can buy 1.5 months supply because you're only using a month or selling a monthly total, right? That means you are managing your cash. It will always give you cash for something else. You see? Because as soon as you put it in something that's non-cash, you don't have direct access to it. And that is one of the reasons why some of the companies, especially some of the financial companies, is so collapse. They are locked up money. You've given money out as a loan, and somebody is coming and wants his money back. And you can't because you put it at a place you can't easily get it back as cash because you've contracted the person, he's giving to you over a 12 months period. It's like the stocks you got. You're going to sell that in 6 months. And so until 6 months come, you're not going to get all that money back, assuming you sell them all. So that's the point, that you need to manage cash. And you find out that these days, if you read up a bit, people will tell you they have what they call just in time. I mean, keep minimum stock. The same thing with many people are having this experience at the banks. They tell you, why don't you do call account? Why don't you do a fixed deposit 1 week, 2 weeks? Or why don't you even buy 1 month treasury bill and so on? Just then, because you look at your cash balance, you always have, say, 25,000 minimum in your bank account. And it means that you're not using it. So your accountant can say, why don't you put about 15,000 of it? Because we never really get to that place, into some income earning something. And that is also another way of managing your cash. So you can just put it, you can put it in various, some in deposits, some in treasury bills, so that when you need money, you have it, but it will give you some return. And that's essentially what everybody is doing. And that's what it means, managing your cash.
Right. If you've just tuned in, this is Masterclass here on your Superstation Joy 99.7. We're having a conversation on bookkeeping and accounting with Mr. De Graft-Johnson. I have another question for you. Explain to us the concept of depreciation.
Yeah. I think the best is that many young men and women this can like cars. You bought a brand new car 2 or 3 years ago, and you've been using it. Nobody will tell you that it's come through some wear and tear. So the accountant says you bought this car, let's say at 100,000, right? You've used it for 2 years. Theoretically, it shouldn't be at the same value. I'm saying it because in Ghana you can buy a car and then sell it at high because market value comes in. But for the purpose of account, you came in as a value of, say, 100,000. Now say, okay, accounting principle will tell you a car, 4 years, 5 years at most. So we will decide that every year we'll take out, if we're using 4 years, a quarter of that value and say that is the wear and tear. It doesn't mean that is actually the wear and tear, but it's a notional concept we use for uniformity. So that will mean that at the end of, say, 4 years, on your books, it's no longer 100,000. It's all gone, and you probably put a figure of 1 just to show. But the car is there; it's in good condition. But the book value, right? That's the difference. I mean, the book value is more or less nil, and that's why, for example, people have never understood if you work in some places like banks, and so it's fully depreciated, and then they give it some value, not to, and then sell it off, and people don't understand. But that is the point, that in terms of accounting, it's at the end of 4 years, it doesn't have that value.
What would you say is a bridge between that notional theory of depreciation and the reality on the ground? And I say that because beyond the 4 year straight line depreciation or 5 year at 20 or 25%, the vehicle still continues to work if it's a car for about 3 or 4 years, and that is considered gratis because the depreciation period has ended. What would be the connect for a business owner to say, listen, this thing is fully depreciated, it's no longer on my books, it's a notional theory, but I still have physical use of the property? what would that mean to my accounting process?
You see, the difference is that you're looking at the value of an asset, and you don't want to give a value of an asset that is overvalued. I'll give a simple example. Somebody owed your company maybe 25,000 at the end of January, an individual. So the auditors have come, they are working on none. Just around the time you're about to sign the accounts, the man died, and you realize that you will never recover that money. If you tell the accountant, he'll tell no, then that asset is no longer really an asset. Do you understand me? It's gone. So let's write it off as a bad debt because we now know. Are you getting me?
Yes.
So each time, you don't want to put something in here because depreciation works very well in the West. You can't go and buy. That's why people say about this second-hand car very cheap. But here, because of the force of inflation and demand and supply, that car that you think, according to the book value, you can sell it and even get the original. Yes. So market forces
the original price back.
Yes. So it's because some companies take it as part of the incentives to keep their top management. That's what the cars are. But if it's your private and you really wanted to sell and buy a new one, you would sell it. But accountants will look at it differently. You will get what we call proceeds, the actual money that came. Because you have some values in your assets and depreciation. You'd have to take those off now. Then compute whether you made a profit or not. So if it's fully depreciated, most of that proceeds is the profit. But if there was some residual value, you take it out first. So you would get proceeds, profit on disposal, and if there was any gross value figure, that would go off, and then the depreciation, then is the net book value that you are actually setting off. See?
We'll be going for a quick break shortly, but let me just chip this in. For someone who's listening to us, how do they keep their books properly? They're a small company. They probably can't pay salary to hire a financial accountant or somebody to keep their books. How can they do this? We talked about digitization. At the conference I spoke about, there was conversation on digitization and the use of technology to help our businesses. Very quickly, I know that it's a big conversation, but just before we go on the break, what are some of the areas that a business owner can find help when it comes to proper bookkeeping and accounting?
One of the things we are doing at Firstcode is tell you just started your business, come to us. We'll help you set up. We'll teach you a bit so that this big, because what I said, that you can be your own bookkeeper because that skill is available for you. You don't require any specialized training to be a bookkeeper. And we tell you the kind of things you must record. And then periodically we come and look at it to help you because you have to start at inception, and it doesn't really cost anything at this level.
Firstcode Management Services. I like the answer that you gave. Like we always say here on the show, when you need help with anything, any area of expertise, shout. Ask for help. And when you're asking for help, talk to Firstcode Management Services and they will be able to help you. We'll put their number out before the end of the show, but we want to get interactive in a few seconds and so that we can hear your questions and your comments and your contributions to this conversation. How are you keeping your books in your company? How are you managing your company? Are you doing the right thing? There's money out there for companies who want to set up. The people are giving grants. It is people's business to support businesses like yours. They are getting money from investors, joint investors. People are putting money and saying, I want to invest. Private equity firms, $200 million, $300 million available. Some are actually targeted at businesses in Africa. Some are targeted at businesses in West Africa. There's money for you to do your business. How do you access that money? One of the best ways to do this is to keep your books properly. We continue with this conversation, but before that, we'll take a quick break. We'll be right back.
Your favorite on-air business development program, Joy Business Masterclass, is in session, and you can interact with us on Facebook via the Joy 99.7 FM or Joy Business pages. If you tweet, the handle is at Joy 997 FM or at Joy Business GH. Don't forget to hashtag JB Masterclass. You can also call us on 0302 216541 or send your questions and contributions through to the WhatsApp number 0551 111997, and our facilitators will address your concerns. Attention everyone, class is in progress.
Welcome back. This is Masterclass. So if you're listening to us this afternoon and you own a motor vehicle of any kind, I've got some brilliant news for you from Goyle. Going cashless has never been this convenient and exciting. GOIL's e-payment systems are now compatible with the GH-Link and the national payment platforms. Now, you can use your GH-Link card on GOIL's POS machines to purchase fuel. GH-Link card offers additional payment options for fuel purchases at GOIL stations in addition to the Go card. Every fuel purchased is recorded automatically on your monthly bank statements, helping cardholders track and manage their expenses. So go ahead today and use your GH-Link card to buy fuel and all lubricants from any of GOIL's over 400 stations across Ghana. Go cashless and protect yourself and stick to all the COVID-19 protocols in these times. GOIL, they say good energy. GOIL, Yenara, Yedia. You want to find out more about this information, drive to any GOIL filling station and ask them about the GH-Link card, and they'll be happy to share some information with you. We're interactive right now. We're also streaming live on Facebook for those who want to watch us as well. Numbers to call 0302-216-541. That's 0302-216-541. You can also send your comments to us on WhatsApp on 055-11-11997. That's 055-11-11997. Numbers to call again, 0302-216-541. Let's talk. Let's share ideas. Life is too short to make all the mistakes ourselves. Let's learn from each other. What are you doing in your company that is working for you? Share your experience. Let someone else learn from it. What are the challenges that you face in your business? Share it also. And let's also share some thoughts and be better for it so that we can make our nation great and strong. This is our own country. This is our own continent. No one will fix it for us. We have to do it ourselves. So while we're waiting for the phone lines to ring, Mr. Johnson, I have a question. A lot of our people import products. They import almost everything. And so the conversation on exchange rates come to play. I'm looking at concepts like, we've talked about depreciation, we've talked about all the other ones, but I'm looking at concepts like exchange rates, exchange losses, time value of money. If I gave you 10,000 cedis today, and I gave you 10,000 cedis in a week, the value of the 10,000 cedis has diminished depending on what's happening within the economy that you're going to use it. Time value of money. So sometimes when people are paying you money, they say, "Oh, meet you, I'll pay some more." What you are doing is that you are diminishing the value of that money. You're supposed to pay at a certain time, you don't pay. That is why banks will put interest rates at a certain level to hedge, to prevent you from causing them losses. Explain it a bit more for some of our business owners. Time value of money, exchange losses, exchange rates.
Okay. Let's take petrol. As soon as the price went up, the same maybe 1,000 you're buying petrol, you get less liters. So that the value in terms of what you would have got maybe a week, 2 weeks back has reduced. That's what time value of money should make you understand, that the purchasing power is reducing over time. Now, for companies that just import, right, you're always at the mercy of the exchange rate. So you bring in at a certain rate, and that's how you costed and sold. If by the time you are ready to import another, the exchange rate has gone up, it means that you need a bit more cedis than before. And the differential might show in your accounts that you are making what we call exchange losses. That means you are using the same amount of dollars, but the difference is coming in terms of rate. So I owe you $100. I owed you in January. Now, if I ask you to bring back to me $100, right, and you now had to go and buy it, you immediately see that when I gave it to you and you went to change it to cedis, maybe it was 5,500. But now, to give it back to me in the same dollar, you've had to go and buy it maybe at 6,000. And that difference is the exchange differential, which is a loss. So, but with companies that both bring in and export, there's a hedge because you are not losing out because you are earning foreign currency as well. So if you remember in Ghana at a certain point in time when the exchange rate was very volatile, if you went to a pharmacy, every Monday they program in the current rate and it will change everything. So every price was dollar based because they had to hedge against that. So it's very important if you have a government and it's able to maintain exchange rate, then you can plan. Because it becomes very volatile, then at every stage you have to do projections about exchange rate in order to sell it at a price, get a return enough to cover for the possible loss when you're going to buy you know. So the accounting way of doing it that you use the rate at which you executed the transaction. So if I buy something today, use the exchange rate. Tomorrow, use the exchange rate. But at the year end, then you'd have to all the holdings. Let's say you have bank account and it's in dollars. All those dollar holdings, convert it at the rate ruling at that day. So there are two different rates: the transactional one and then the one you use at the balance sheet date to. That's the best way to account for it. But it's complex when you have a company. You know, there are some companies who are subsidiaries and people are working with them. So you find you're preparing the account in cedis, you're preparing euro, you're preparing dollar. And sometimes you find your figures are not because you have to just take a balancing figure and call it exchange differentials. And sometimes to the taxman might be very happy with what you say exactly what's coming. So you could or you may not have tax implications.
I'm talking about tax. It brings us to another aspect of the conversation. Once you want to benefit from grants and from people who want to invest in your business, both locally and internationally, they will do this according to the law because the taxman is interested, or should I say, the lawman is interested in everything that happens in our country, including the way we do business. Now, for purposes of compliance, as we've spoken about earlier, you want to do the right thing. Doing the right thing means that also being financially responsible, both to your business and to the state. That's where tax comes in. Oftentimes, you hear people say that businesses are tax agents of the government, which means that they have a responsibility to apply correctly the tax law provisions. And so you find that if you are in a rental business, it used to be, if it's residential, it used to be 8%, and then if it was commercial, it's 15%. I hear now it's 15% across board. If it's services, there's a percentage they bill. If it's goods, and I'm referring to withholding tax. There's VAT. There's all of that. Just discuss with us so that our business owners can understand. Number one, why it's important to be responsible when it comes to tax, so that you can also easily access funding and you can operate your business peacefully and quietly. The lawyers will say you shall peaceably hold and enjoy your business, and you will fall foul of the taxman. And also so that you can also do the right thing and keep your books. In the conversation of bookkeeping and accounting, talk to us about the role of tax.
Basically, because the rates of tax for various things are a bit complicated, it's not so easy for the business owner to just get up and, So when you have one transaction, then it will now help you. For example, if you're just paying any salary, they just give you a net, right? Then we'll come and show you how you build it. This is the gross or basic salary. This is the social security implications. You have to take this out, and then this is how you work out the tax and so forth. So we'll show you how. Then we'll tell you that, look, all these allowances are also subject to tax, and show you what to do. So that's why we say when we get involved, we have to train you to know what to do, right? Now, the area that people have a bit of challenge with is the withholding taxes on goods, right? You want to buy a computer, you want to buy cement and those things. That often poses a lot of challenge to people because it's a cash transaction. Nobody wants any withholding and things. But if you're a well-established business, so if you are an established and existing company, what we come to do is to give you a bit of tax advice, because if your only protection is to record the right thing, otherwise when the tax auditor comes, he's going to make assumptions on your gross figures and also calculate penalties on it. But if you did the right thing, and especially if it's withholding, you are just being an agent to the government. It's not so much as it's impacting directly on you. But if you don't, then the impact will come on you. So I think in the future, one of our tax people will come here to explain, because the idea is to make you understand that you are in a regulated regime. And if you don't comply, the government tries to do this by, if you want this, come and show your tax clearance certificate, show
tax
your
credits,
TIN number and tax
rebates,
and the market is changing. It's becoming much easier to access your tax credits and so forth and so on, and more people understand it. But the advice we tell that most things are taxable now. I mean, just about almost let's take it that any kind of allowance or benefit you are getting, your donations, gift, your funeral, whatever it is, all those are subject to tax, but the taxman is not able to implement them all. But if you're running a business, the transactions will tell them which and which. So we tell people that if you did the right thing, you save yourself a lot of money. For example, you ask somebody, why aren't you declaring dividend? And he's talking of dividend tax. That's what he's concerned about. But he doesn't see that not declaring dividend will cost him something because why? That means you found some backdoor ways of collecting your dividend and so forth and so forth. And when the tax man comes and is looking at some things, he can impute certain things. They have their techniques.
They have their techniques.
You know?
Now, numbers to call again. We are interactive right now. This is Masterclass. Numbers to call 0302216541. Pick up that phone. Give us a call. We're talking about bookkeeping and accounting and good financial management of your companies. What is your personal experience in your company? Pick up that phone. Give us a call. 0302216541. Let's share ideas. Let's all become better for it. Or you can send comments on 05511119997. You know, we had here on the show from KPMG, Richard Corey. Good afternoon, Richard, if you're listening to us. And he said something that one thing that we should know is that some of the wealthiest people in the world are people who pay attention to their taxes. You see, oftentimes we look at only one direction of tax, which is that the taxman is taking. But by law and I think by statute, the taxman also gives back a lot. It's just that we don't know. There are lots of things that they give back by way of credit. And I think that in another session, we can look at some of the things that they give back. If you have children who are in school, there's a tax rebate. If you're married, there's a tax rebate. If you're, you have dependents, there's a tax rebate. I mean, I was surprised to find out that even your salary limits at a certain level, if you're a paid employee, also has rebates. You know, so it's not just one-sided. But I want to come to the area of attitude. I want to end with this. Attitude in our businesses, financial responsibility. What do you think is happening in our business, and what advice will you give business owners? Oftentimes you hear people say, pay yourself a salary. Work the numbers so that it agrees with what's coming in, so that you are not taking more than the company's capacity. Don't just take from the gross. Don't take from the revenue. Take from the profit. Share with us very briefly, if you like. And when you're done with that, share with us the details of Firstcode Management, how people can get to you, and give us your takeout for today. So we just end it together. We're starting with attitude first.
Yeah. The most...
Before you go quickly, I've got Charles in Kaswa. Charles says, can bookkeeping be practiced at home, and how the money is spent?
Yes.
The answer is yes.
Yes. Even as an individual, you know.
Yeah. So, Charles, if you start from home, it's better. Then you can send it to your business.
You take a direct record.
Charity begins at home. You'll be shocked to find out how much you are spending.
Yeah.
But please, by all means, try. Let's talk about attitude.
Yes.
Of spending for business owners.
When you talk to business owners, you find a lot of them haven't even decided what kind of salary they should get, you know. And
so spend on the go.
Yeah. And so when you say, no, you take a fixed figure and work with it. But they don't. So that also affects the kind of profit figure they get, because it's as and when. Okay. Now, what we try to tell them, look, try to recognize that your business is separate from you, and deal with it at a separate entity. So even transactions between you and the business. For example, you are using part of your house for a business, and it's never occurred to you that if you rented the same portion, you'll get revenue. So in your books, there's no rent expense. But when we come in and tell you, no, this is an expense towards the business. If you're renting this place or whatever, do something to indicate, maybe a small agreement showing that, so that cost can be imputed, so that you know, because it has implications also for tax and things like that. And if they don't recognize that the business is not me, you know, and see it as a separate legal entity, so they keep dipping into their pocket and spending money for the company. And that's normal. But if they were recording, for some of them it should be refunds, or some of it is an investment. You went abroad and bought 2 computers and brought to the business, and you just dumped it there, and that's it. You haven't recorded it anywhere, but they are using it in the company. These are some of the things. So when we sit down with people and tell them the various ways they miss out and sit up, they actually realize they've lost a lot about some decisions they took in the past.
And that's where they need help from companies like Firstcode Management.
Yeah.
Tell us about Firstcode Management very briefly and how people can get to you.
Yes. What we try to do really is to first get people to understand the space they are in. That whether you like it or not, there are laws that ask you to, file returns and so on and so forth. And you also have to then understand that if your business is going to grow, right? So will help you from startup, will help you to scale up, and all along financial elements are key. And we tell you that you don't have to look at it from the financial perspective. This is why we say if you're a startup, come. I mean, let's say your son decides to start up a business. He's just 20, started a business. Let him come and see us, because that's the start point.
Where can we find you if we're looking for you?
We are at 60A Boulevard,
Boulevard.
Westlands, yes.
Okay.
And,
all right. We'll put their address and their phone numbers out as well, so that if you want to reach them. Quick question here, then you run that for us. I've run out of time. This is from Nana Kwesi Asafoje, Ghana Law School. It says, your man, okay, his name is Mr. De Graft-Johnson, is making accounting language look much more simpler than ordinary English. I'm taking a course in accounting and I don't understand some things, but he just broke them down with ease. Please bring him again. Mr. Johnson, this one is a direct key from our listeners. What's our takeout for today? If we remember nothing from this conversation, what should we take away from here?
Yes, that you, the business owner, you can practice at least what we call bookkeeping, because you have the skills. All that is involved is that just record everything that you are spending, cash going, cash coming out, right? And also try to keep as many of receipts or documents involved in the transactions as possible. When you have that, an accountant can come and build proper accounts out of it, because basically you'd have covered all the primary elements of the financial statement.
So you can keep your own books, and then later you get help from companies like Firstcode Management Services. This has been an interesting conversation. We will continue in the line of the same conversation again next week, God willing. Thank you so much. My name is Yaw Barnafo. This has been Masterclass. Up next, we continue with The Ignition with Sammy Forson. Thank you for joining us, and see you same time next week.